Now to talk about some of what's happening, Sarat Sethi, managing partner at Douglas C. Lane and a CNBC contributor. There's a couple of stories today, I think, Sarat. I mean, I'd like to just talk about Microsoft and what's happening and fundamentals and how well the company's doing in the environment it's operating in. But it's just hard to focus when you have something so outrageous or just so compelling. I don't know if it's outrageous. I don't know how to describe GameStop. When we talk about it as being manipulated or being gamed, we immediately hear pushback that short sellers need to be taken to task, and this is the way to do it. Overall, what are your opinions on what we're seeing with the whole saga of what's happening in some of these names, especially GameStop?
So, Joe, it's scary as an investor, and we don't short. We if we don't want to be in a position, we don't buy it. We just go where we think there's opportunity. But this is an incredible story that, when you look at the amount of information out there, whether it's on Reddit or other boards, and you have individual investors, and as you called it, I mean, using calls that are very cheap at this point, given where interest rates are, given where anyone can just go on Robinhood or go anywhere and buy these things. So you're watching this incredible story play out where you've got a whole bunch of individual investors against some institutional investors. And really, I don't think anyone wins in this. I mean, this is not good for our system. Regulators do have to come in. I'm not sure how that really works. But when you look at it as an investment, it gives me pause that we're at some part of the market that could be a catalyst to pull back. Maybe this is it, but so much capital going after something that doesn't really fundamentally make sense. It's become a game. It's like Las Vegas, and those who are playing it somebody's going to get hurt, and we're going to walk away with this story as you guys have been reporting, and we don't know how it's going to unfold, but it's going to get ugly out there. And as an investor, I would not play in this. It's just interesting to learn from what's going on.
I mean, the calls compared to the stock price are cheap, but not compared to inherent value. You've got a stock that's 100 points out of the money and a strike price 100 points away. You would think as a seller of the calls at $19 that you could make, and suddenly it blows through 100 points, and suddenly you sold some calls, and now what you sold for 19 is trading at 60. I mean, it's frightening, and there's going to be losses, and there's going to be there's going to be liquidation.
And it feeds on itself, right?
Yeah, I guess
it feeds on itself because to your point, if you're watching just the people buying calls, there's somebody on the other side of it, right? And there are intermediaries involved, and there are people shorting it, right? And they're borrowing these shares, and then all of a sudden you have illiquid shares, and you have margin calls. So there will be some effect here, and as you're watching some of the funds come out, it'll be interesting for the market, because I think this is something that I don't think regulators expected, and I don't think companies expected. So we got to watch this carefully, and like you said, they're going to do it to other companies as well. So which side of it do you want to be on?
Shepard Smith here. Thanks for watching CNBC on YouTube.